is for educational purposes only. All videos, presentations and writing are only for educational purposes and are not intended as investment advice. You can implement this while trading at your own risk. If you would like to learn and follow our videos, please subscribe.
Hello everyone, it's nice to be back again. I'm Victor from Niger TradeWise. I'm hoping we all had a great week. I'm hoping to get into the new week feeling better rested and refreshed. Now, the previous week, the market focus trades we had was the British Pound USD, Australian Dollar USD, and the New Zealand Dollar USD. All trades went in the direction we were focusing on. So I'm believing that everyone who saw that video probably took some money from those trades. Now, what are we going to be focusing on today? Today we're going to be looking at moving average and why they are important. With that out of the way, let's go to our chart. Now, our focus, what we're going to use for examination and to clarify things about the moving average, will be the Euro USD chart. Now, I like to look at, before I do anything, I like to look at the daily chart. But looking at this chart, it is blank. It doesn't say anything to you. Of course, we can see here the candle went up. This is a bullish candle. This is a bearish candle. Now it means the bearish, it means it's going down, going down, going down, going down. Yes. We can actually minimize the chart to look this way. It shows us that this is bearish, meaning it's going down. We can expand it so it's clear. But I'd like to go further. Before I even consider doing anything to this chart or thinking about buying or selling, I'll put in a moving average. Now I'm going to show you how it's done. We click on the moving average. I like to use the exponential, the 13 period. Click on OK. Wow, this now looks very different. As you can see now, the candles all of a sudden have dropped below the 13-day exponential moving average, which tells us one thing: this is looking bearish. Now, of course, this is just one of the instruments that will assist us in placing the trade. Now, why do we rely so much on the moving average? Because if we are to look at the weekly chart, which some people use as the tip for their fundamental analysis, we minimize this. We notice that the candlesticks have been going up and down, up and down, up and down. But for quite a while, since January 2018, it has actually not crossed the exponential moving average, meaning that it always comes, touches it, and goes down. What I'm trying to lay emphasis here is this: that before you do anything, before you place a trade, I'll encourage you to, if you are not already using moving average, you should probably put one on your chart, because this will help you filter out a lot of things. I always like to look at the longer time frame because it tells you what has been happening in the market for some time. Then I come to my daily chart. I look at it. I see this is bearish. Now, of course, I would like to trade this. So I will come here to the 4-hour chart and look. There is no buying opportunity here because it is still bearish. Instead, I will wait when this goes back to the very top, and for example, we might point to this point or here, and then we look for a bearish entry. Now, of course, alone the moving average is not enough. You can then bring in what we call an oscillator. There are various types. You have the relative strength index. The settings are always there, so you don't have to do anything. Now, as we can see that here, what it has is, sometimes they have different readings, but as we can see here, it's 30 and 70. Now, what we see here says it is oversold. So because we want to go bearish on this, we will not be taking this trade. We'll wait for it to pull back to the top. Perhaps, like I mentioned, it might be here, and then we wait for a pullback in the resistance, and then we can enter the position with a bearish pick. Now, this is a lot to take in all at once, but what I'm trying to tell you here, what I'm trying to emphasize is that before taking in any trade, you should make sure that you are only trading in the direction of your moving average. Now, with that out of the way, the next thing I'm going to be discussing about is what are the trades, what trades are we looking at for this week. For me, like I mentioned, I'll be looking at my area of focus will be the Euro USD, and I'll also be looking at gold. Now, from what we see here, it clearly tells us that gold is really bearish. So of course we need an oscillator to assist us. So we come here, and perhaps we can use there are various ones. We don't have enough time to go into each and every one of them, but perhaps I want to use the relative strength index. Now of course we can see that it is quite bearish. As you can see, it's going down. Of course, we will come to the 4-hour chart, like I said, and wait for it to get to about 70, where it is oversold, and look for a selling opportunity whereby we will enter our short entry. I hope this has been able to clarify some issues about moving average. If you have any questions, please you can leave your comments down in the comment section, and if you want to see more videos like this, don't forget to hit the subscribe button. You guys have a great week, and see you guys next time. Thank you.